I think the idea that, okay, we're going to get the mother lode of all bubbles, I actually think what you're going to see net is that things in crypto are going to get less violent because we just understand it a lot better. And Wall Street understands it better, right? And it's certainly when you saw the crazy internet bubble, nobody on Wall Street understood the internet.
We're in like DeFi summer where people are saying, oh, this is really fun. Let me go do this. And everybody understands the game they're playing. But what it's creating is a bunch of noise. So I think what you see next are, in part because of what's happening on Pump.Fun, the media cycle kicks in.
Scale is the blockchain that is simply built different. Other L1 networks have costly transaction fees, clunky user experiences, and lack true adoption in AI and on-chain gaming. Explore the gas-free ecosystem at skale.space/ecosystem and follow their journey on X at Scale Network. That is Scale with a K. Hit the link in the show notes to get started. Hey everyone, Jason here. Wanted to talk about something that's been on my mind a lot recently. We should not be just recreating the TradFi industry. That's why I'm excited to share with you that today's sponsor, Magic Eden, is getting into token trading, and their vision is to become on-chain Binance and then much more as the entire world moves on-chain. Stay up to date with Magic Eden's journey by giving them a follow on X at Magic Eden. Tired of losing track of all your tokens? Uniswap Wallet is designed to easily manage, store, and swap your crypto all in one place. Access thousands of tokens across Ethereum and more than 10 other chains instantly by using Uniswap's wallet today. Download it today. It's available on Chrome, iOS, and Android. Hit the link in today's show notes to get started. Hey everyone, Jason here. You've heard me talk about today's sponsor Mantle a lot this year, and I wanted to just take a quick second to really highlight them. With over $1.6 billion in total value, locked in a massive $2 billion treasury, Mantle has become one of the fastest growing networks in crypto. Through groundbreaking protocols and strategic partnerships, Mantle is really transforming what is possible in DeFi. To stay up to date with what's going on in the Mantle ecosystem, give them a follow on X at 0xmantle. Hey everyone, Jason here. For Black Friday only, Ledger is offering $70 in Bitcoin if you upgrade to the Ledger Flex. You can also save up to 40% on selected Ledger Nano wallets and accessories. Offer is only valid until December 5th or while supplies last, so be sure to hit the link in the description of today's episode so you don't miss out on this really good deal. All right. What's up, everyone? Welcome back to Empire. We have a classic. I think Haseeb and Avichal have been on more. Our favorite.
Not only is it a classic, it's the fans' favorite. So we'll be a flies in the wall because people want to hear about you guys. They don't want to hear about what we have to say. So
yeah,
welcome,
so
guys.
I'm going to start this the way that we started the last episode, which was 9 months ago, where we said, hey, I think the context for 9 months ago was, hey, look, it seems like the market's kind of coming back. Like we're just kicking off the year. Like things are doing pretty well. Maybe we're going into this actual bull market. And yeah, sure enough, we're in a bull market. And a lot of the things that both of you guys called that would happen in 24, sure enough, came right. You guys nailed a lot of your predictions for the year. And I'd love to maybe start this episode by just actually reintroducing that question of where are we in the cycle and how do you guys think about like what this cycle looks like as we turn the corner on 24? So whoever wants to take that first, we can turn this into a conversation.
Haseeb, go first. As the AI expert, why don't you predict the future for us?
Yeah, what I should have said is, Avichal, thank you for joining us and gracing us with your presence after appearing on the Ben Shapiro show.
That's funny. Ben's actually become a good friend of mine. His platform is unbelievable. We were talking about it before. It's just the range of people that watch his material is just unbelievable. Okay, but to crypto, your question. What happens? Where are we in the cycle? What happens? I think we're still pretty early. I don't think we've really seen like the media frenzy and the sort of retail and all that stuff. And I think maybe to take it a slightly different way, I'm kind of curious what Haseeb thinks. But my concern for years at this point, I think Haseeb, I probably told you about this like 3 years ago or something, like when we were in the mega part of the last cycle, is my concern is that this cycle is actually too big. Like I went back at some point and looked at the 99, 2000 internet bubble. And if you go look at that, it was, if you add up the NASDAQ and the S&P, it's something like 17 trillion. It's like 16.5 trillion in market cap. And if you look at where crypto is today, like 3.5 trillion, something like that, it's very plausible actually that we get to something like 15 to 20 trillion in market cap. It's not financial advice, obviously, but I don't think it's out of the realm of possibility. And I think historically, if you look at like proper bubbles, like I would assert we haven't actually had a crypto bubble, because you can't really have a bubble without Wall Street. And so now we have Wall Street involved in the mix. Like all the rails are ready to go and they're all bought in. And so I think the potential for this to be like a NASDAQ S&P 2000 kind of setup is actually a little bit frightening to me, because I think that could really poison the well. And so like getting too big too fast and then coming back 80%. Well, if it's a bunch of crypto degens that have been doing this for years and years, people don't really care. When it's people's retirement accounts and people can like borrow against their homes and they take out leverage to do this, and it's, you know, grandma losing her retirement savings, that's really bad. And I'm a little worried that this might be the cycle where that happens. And I think that doesn't kill crypto by any means. I think like the tech survives, it does great. Like some of the best years of the internet were post 2001. But like the next market, I worry this cycle might actually be like a pretty brutal cycle.
So before we go to Haseeb, Avichal, on that point, what's more dangerous, people punting meme coins or people punting MicroStrategy at that premium?
Yeah, that's a good question. I think it's actually the MicroStrategy setup. And the reason is that it's a little bit, it feels, because it's blessed by Wall Street, because it's a stock, because you can buy it in Schwab, it somehow feels more safe, you know, like that people are used to that. But it's really like a wrapper for just a tremendous amount of volatility. And I worry that people don't really know what they're getting into. I mean, even with things like GME, at least the people that are on Wall Street bets, like look at that and they know what's going on. They understand the game that they're playing. And I think the concern is if people don't understand the game that they're playing, those are the people who get wrecked. I'm pretty sure right now, if you're going to Pump.Fun, like, you know, the game that you're playing. And so, you know, it's like if you get burned, you know, you kind of knew what you're doing. And so, yeah, that's I think that's a really good way to put it. Something is like the leap that you see in the later parts of the bull market, where it just goes into frenzy, is people thinking this is the new paradigm. This is like the new normal, and all of this stuff is worth what it's actually worth, and most of it's actually vaporware. That leap before it was just degens, and now it's going to be like people on Wall Street and people in their 401ks and stuff, and that's a little bit scary.
Haseeb, how do you think about where we're at right now?
I totally disagree with the story. So let's break down everything that Avichal just got wrong there. So okay, so starting from the top, I think the likelihood that we see another crazy retail cycle, or a crazy bubble to the same extent that we saw in 2017, or to some extent in 2021, I think that's just actually very unlikely. And the reason why is that I don't actually see that much unrealistic expectations about crypto anymore. I don't see a lot of people saying, oh, this is the future, everything is going to be on chain, everybody's going to be using this for everything. I see people actually having much more tempered expectations of what this stuff is. Like there's a little bit of a GameFi rally that we saw just a couple of days ago, but for the most part, like the GameFi tokens are still tiny. The AI tokens are tiny. The DeepIn tokens are tiny. Most of what crypto market cap is just Bitcoin, a bunch of layer ones that sling around stablecoins, and that's like actually most of it, right? And then there's some DeFi and there's some other stuff happening on chain. And I think people are actually pretty sober about it. I think the things that people are really bullish on, one, Bitcoin can become like gold. I think it's very hard to imagine that the increasing amount of consensus around Bitcoin is going to result in some massive, value destructive event. I think it's just going to be this. It's going to be volatile, but it's going to be this gradual accumulation of more and more consensus and more of a Schelling point around Bitcoin. And then for everything else, like the reality is that the metrics belie reality in a way that it's hard to be deluded anymore about where crypto is going, right? What you see is a lot of fairly linear charts, is that stablecoins are going up, on-chain addresses are going up, transaction volumes are going up, DEX volumes are going up, but nothing is really exponential. And I think that's good. I think it's good because it gives people this healthy sense of reality that I don't think that it's very likely, unless you're talking about Bitcoin, that we're going to get like a $15 trillion insane bubble that just like everybody in Wall Street starts pouring all their money into crypto. I think that's much more likely for AI, because with AI, there's a real coherent story you can tell about how this completely changes the world, right? That's what you need in order for a bubble to form to the extent that it did in the dot-com bubble, as well as the way it did in 2017, is that people didn't really have a clear picture of what blockchains were going to do, who was going to use them. It was all a story. Today, it's not really a story. There are a few things that are story-like, of some of the AI tokens and some of the stuff that hasn't really proven its product market fit yet, but the core use cases of blockchains are pretty much here. It's less about talking about what's going to happen so much as it is just measuring the growth rates and looking at, hey, what do we think this thing is going to become in 5 or 10 years? But it's not, wildly gesticulating in without data. Now we actually have quite a lot of data to point at, and I think that is making markets a lot more rational. Like, I think it's basically correct that everything should have gone up. I think it's pretty obvious that a lot of what was holding back this stuff is regulation. If you look at some of these stablecoin businesses, if you look at layer ones, if you look at the people who are transacting on chain, a lot of the reason why they weren't was because they were scared. Was because they're worried about regulation. They were worried about, hey, is this stuff illegal? Is it going to be taxed out of existence? Is it going to be shut down? And now they know, okay, for at least 4 years, I know that this stuff is going to be there, and potentially it's going to be even regulated in such a way that I can rely on it. All of that is resulting in a huge growth rate. If you look at SMBs adopting stablecoins, if you look at the total amount of transaction volumes on chain, DEX volumes, all those things are going up. Some of that is speculative, but I think the idea that, okay, we're going to get the mother lode of all bubbles, I actually think what you're going to see net is that things in crypto are going to get less violent because we just understand it a lot better. And Wall Street understands it better, right? Like, you got banks writing research reports about, Solana transaction volatility and, the protocol upgrades. That wasn't happening 4 years ago. And it's certainly when you saw the crazy internet bubble, nobody on Wall Street understood the internet. That, I think, is the big difference between now and previous massive bubbles that we've seen.
I'm trying to think through whether Haseeb has more faith in markets than I do, or way less. Like, I'm trying to like, on the one hand, you're like, okay, the market should be efficient and like look at the data and figure these things out. On the other hand, you sort of expect the people to take advantage, like the market to take advantage of the information asymmetries and do things like meme coins. I mean, how do you think about things like the DeSci pump that's happening right now, or crypto plus AI, or like, I don't mean we're very big fans of Solana, obviously, but like, I mean, do you look at Solana and say, yes, this should be worth $136 billion? Like, how do you think about that?
Yeah, I think it's very hard to describe any of those things as bubbles. I think, like, okay, Solana has flipped Ethereum on a massive number of metrics over the last month, right? If you look at total fees paid, you look at MEV, you look at transaction volume and DEX volume and all that stuff. It's been flipping back and forth for a while now.
Yeah.
So I think it's pretty hard to argue that, like, okay, people are making a fundamental mistake when they're valuing Solana at a third of Ethereum. You might say that, okay, maybe it should be a fourth, maybe it should be half, maybe it should be something.
Yeah.
But that's clearly not the wrong order of magnitude for what Solana could be 3 to 5 years.
But then,
do
you think? How do you think? I mean, I'm not trying to paint you in a corner with like a financial, from like the SEC perspective or anything, right? It's just like, but you look at things like Ethereum at 400, and are you like, this should actually be worth 400, or do you like? I'm just curious how you think about that.
So I don't know if you measure it right now on a function of what is the total amount of MEV or what is the total amount of fees paid, you get some crazy large multiple. I think it's pretty clear that ETH is not just being valued as a function of the fees generated on Ethereum. It's being valued at like this sort of sum of parts, and one part is the commodity demand for ETH as gas. Another part is the total fee revenue by burning and sort of buyback thing, and the third is ETH as a currency. And this sort of digital silver, that used to be the story for Litecoin. In reality, that's now the story for Ethereum, whether we like it or not. That's how Ethereum is treated. And so I don't know. I think it's really hard to, from first principles, look at that thing and decompose it and say, here's how much each of the parts are contributing. On some level, you kind of have to take Bitcoin and Ethereum at face value, is that these things are really a function of supply and demand, and everything else downstream is being valued on a relative basis to those two things. I think if you're trying to back into a fundamental value for Ethereum, you're wasting your time, right? I just think you're doing the wrong kind of thing for an asset that is so immature and so poorly understood.
I'm curious, if you apply that framework, like very simplistically, these networks are based on supply and demand right now, not fundamentals, nothing, and there's very little to grasp on, and everything is anchored on Bitcoin, and then you go down from there. Solana is a third of the valuation of ETH. How do you think about, from the demand side of the house, whether it's retail or institutional? We had Eric Peters here before. He obviously, like, historically, venture funds have legacy portfolios in Ethereum. Newcomers, new funds, we don't have a sole ETF. But how do you think about the demand side of the house? And as you underwrite, like, okay, on a relative basis, Solana, Ethereum. I know we keep talking about this, but I'm curious, updated views on Solana as an asset relative to Ethereum.
Well, so the fundamentals of Solana are obviously very strong, as I just mentioned, in terms of the on-chain metrics. That being said, Solana has a huge dependency on the meme coin economy. And in that sense, it's very tethered to, it's sort of like a business that has one gigantic customer, and there's just a lot of customer risk of like, if this customer goes bad or churns, or let's say Pump.Fund launches its own chain and sucks up a bunch of the on-chain liquidity that's taking place on Solana, that could end up being very risky for the overall picture of where the fees are coming from. And I think markets are pricing that accordingly, right? They sort of know that, hey, DeFi is very, very sticky. Meme coins, we don't know how sticky meme coins are, right? It's kind of too early to say because they just showed up like, 10 months ago, basically, as being this huge force in crypto trading. So I think markets are being thoughtful about it. At the same time, the question of incremental demand, I mean, Trump getting elected has clearly been extremely good for Sol because of the fact that Sol was such an enormous target of the SEC, right? Ethereum, in a sense, like, was kind of the least of a beneficiary from Trump getting elected, because of the fact that Ethereum, even under the Biden administration, had cleared the bar to basically have that exit velocity that, yes, you are sufficiently decentralized, you get to be accepted into the mainstream financial ecosystem, and everything else was too short to ride. And Trump has basically said, okay, fuck it, everybody gets to ride. Obviously, we haven't actually seen it yet, but in principle, it's paved the way.
Is that a direct quote?
That is a direct quote. That is a direct quote. In principle, it's paved the way to a Sol ETF, a Ripple ETF, right? The logic is obvious, is that, look, if Ethereum, which is a decentralized layer one with a bunch of nodes and blah, 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 like, why can't we, look, from ostensibly, I look the same. Now, Solana obviously has a more muscular team than Ethereum does, also younger than Ethereum is. But I think they'll probably prevail in being able to make the case to the new SEC and the new administration that, hey, we should be treated the same. And if and when they are, I think you should see, like, I think that's a big part of the reason also why you've seen Alt L1s do so well post-election relative to Ether, is that they should, because they were the ones with this big regulatory drag and a lack of access to these larger pools of capital that ETH has been benefiting from for the last couple of years.
Man, I'm still hung up on this. You don't think there's going to be people who are not going to get crazy? I'm still trying to reconcile that.
Look, I mean, people always are getting crazy somewhere, right? There's always cycles, there's always ups and downs, right? But what you're describing of like a .com level, flushing of massive amounts of capital and just complete pandemonium.
Yeah.
I just don't think it's going to be that likely. I think it's probably going to be concentrated in meme coins. It's going to be concentrated in certain assets. Asante, you were asking about DeSci, and gaming tokens are pumping. Like, these things are actually really small, right? Like, if you look at the meme coin complex, it's I don't know what it is, like maybe 100 billion of total meme coins. If you look at DeSci, I don't know, I would guess it's probably less than 10 billion, maybe 5 billion even is a right order of magnitude for it. Gaming tokens are probably 15 billion, I would guess. Like, these things are tiny compared to crypto. Crypto is 3.5 trillion. So you will see speculative cycles popping up here and there in individual narratives, but writ large, I don't think you're going to see like $2 to $3 billion of value destruction. I maybe over a long enough time horizon, but I don't think you're going to see anything violent the way that we did in 2017.
I really hope so.
Avichal, does your super cycle with quotes around super cycle mean that it's a longer cycle or just a more violent cycle, right? Because I think just more violent, because I think a lot of people's framework is like this cycle tops out somewhere between like summer 2025 to the end of 2025. Yeah. And so like, A, I'm curious if you guys agree with that timeline or disagree. And B, it sounds like Haseeb probably sounds like you guys actually kind of agree on the timeline, but Haseeb just kind of thinks it's more like maybe like the last cycle, like up and to the right, there's kind of craziness at the end. Avichal, you think it's like a cycle to end all cycles potentially?
I think, well, so a couple things there. So one, I think that the thing that's different to me about this cycle, again, is that like Wall Street is on board and institutions are on board. Like, you have sovereigns that are on board. Like, the real deep pools of liquidity have sort of gotten their heads around what Bitcoin is and sort of kind of conceptually understand Ethereum. They haven't worked their way down the tail, but that's enough that you could have like real dollars coming in, and that creates a wealth effect. And a lot of this is, as anybody who's in the meme coin ecosystem knows, it's mostly paper gains, right? It's not like you actually have the money. It's like you try to exit any of these positions and you just get crushed on the way out, right? You just have massive slippage. So it's all paper gains. But the reality is the way that most people think about their assets is through these paper gains. And so that's where these numbers like, oh, the stock market lost $10 trillion comes from. It's like, well, people didn't actually like cash out and then lose 10 trillion. It's like they went up a bunch and then they went down, and they might still be up, but psychologically they feel like they're way down. That's kind of the effect that I'm talking about. Is a lot of people will feel like they bought in at 100K Bitcoin, and then it went to like 200, and then it's back down to 120, and they're going to say that they lost 40%, right? That's how you feel psychologically. And so, but I think that matters, because I think what it does is it puts it's a huge overhang on the space. Like, I think people, if you go back to the internet, just as an analogy, right? Like, market crashed. There were some real valuable things in there. Everything was just overvalued. But even when like Google was IPOing in 2005, people didn't understand that it was real. Like, people didn't think the internet was real. And when Mark Andreessen wrote that software is eating the world article in like 2008, that was a contentious article, right? People still didn't believe 6 years later that the internet was real, that these business models could be real, and that software was going to eat everything. Which in hindsight, you're just like, oh, that's obvious. Like, that, of course, that's the way the world works. But when he wrote that thing, it was like a very contentious assertion that software was going to eat everything, and the internet was going to be 10x bigger than anybody thought. And so I think this is, the fundamental drivers of that, I don't think were technological. They were human nature. And the fundamental drivers were people get greedy. People stop ignoring they ignore the fundamentals. They stop paying attention to what actually, matters. They get over their skis in terms of what's possible. And this time it's just at a larger scale. So I think like the crash just crushes that many more people. So I think the sort of the cycle thing is like, if that were to happen, I think the next bear market is a much longer bear market, because I think it's extremely sobering, because there's no next pool of capital, right? Like, if like the pensions and the sovereigns are all buying MicroStrategy or something, like, and they all get crushed, who's like the next pool of capital to come in, right? So then you do have to value it on fundamentals.
I mean, we said the same thing about FTX, and here we are, right? Like everyone and their mother, like the top guys got burned with FTX, Sequoias of the world. To be fair, they're not back. They're like, to this day, I think they very much don't want to hear the word ushered crypto in the investment committee. But we're here. I wouldn't have thought we would have covered this quickly.
I mean, that's still, venture capital relative to like the pension markets is still tiny though, or the bond markets. That's right. And so like, now that you have Michael Saylor tapping into like the corporate bond markets and the pension funds and potentially sovereign wealth funds, because they want the exposure, but they can't go buy the underlying. It's like a proxy for them to go buy it. Like I think you're just talking about like an entirely higher, it's like 2 orders of magnitude more capital that can come in. Now, I'm not saying this is definitely going to happen. This is my concern. My concern is actually that this is a setup for really, really crazy capital to start coming in, and the consequence of that on the other side, should that happen, would be actually a much longer bear market. I think you end up with not like a classic 2-year bear market. I think you might have to just like suffer through 4 or 5 years, and then because everything has to be valued on fundamentals.
I want to go back to
which by the way, as an investor, is like the best time to invest. Like if you were investing from like 02 to like 12 on the internet, you crushed, right? So actually, it's a huge opportunity in the wake of that, but it's kind of brutal to go through.
I want to go back to, and this hopefully inspires some more discussion. We always compare against bubbles, so let's take a look at bubbles. ICO bubble 2017, 2018. Just slice the numbers. 18 billion was raised in ICOs. 18 billion. I haven't looked at pump.fun. That's the next figure I want to figure out, but it's nowhere near that. NASDAQ, like the .com bubble, per day, VCs invested $500 billion each day. So that was 300 billion in 2000.
What?
Venture capital investments peaked at 300 billion in 2000, equivalent to 500 billion. Okay, that's wrong. Perplexity.
That sounds completely wrong. There's no way that's right.
Perplexity is wrong.
No, venture funds were much smaller back then. Yeah, that is definitely wrong.
Yeah. So, okay, this is a data point. Perplexity. I'll blame it on you. When the bubble burst, approximately 5 trillion in market value was wiped out. So that's the crypto. What is it? Crypto now 3.
Right.
I'll come back.
That's in like $2,000, right? So that's
correct.
Probably closer to 10 today.
Yeah. But I'm trying to just like put it in perspective of how crazy things can get. Because when I was sitting there in 2017, 2018, I'm like, this could go run much, much harder. And then it stopped. What do we have different here today? Onboarding is vastly more, like it's 100 times easier, right? People can go straight on chain and go to pump.fun. But you also don't have the ICO mechanisms. You could argue pump.fun is kind of like the de facto. But I'm curious how you guys like just think about going back to this idea. You disagree on how far we can go and where we are. Just kind of curious, like.
Look, I think one of the fundamental inputs to a bubble is unrealistic expectations, right? You kind of have to be able to believe that this thing will just take over the world and be infinitely valuable or arbitrarily valuable. And I think the reality is that people just have a lot more understanding of blockchains today than they did 10 years ago. And I think that makes it a lot harder to have these kind of crazy bubbles, right? It's a little bit like, mobile phones, in that once you see the mobile phone and you see, okay, I can see smartphones are going to change things, is going to be a really interesting technology. But you can feel it, you can touch it. Like there's not this like kind of crazy intensity about it. And you see the numbers climbing, but climbing in this sort of gradual and kind of very understandable way. It doesn't really drive the same level of mania that it would at a time when you didn't understand what the internet was. And people imagine the internet could be basically anything. I mean, we're fixating a lot. Is this, what is this? Oh, this is NASDAQ.
This is the NASDAQ. All I'm trying to show here is that it ran up and then it took 15 years. I think this is what maybe Avichal's trying to show, is like it took 15 years to recover to the high. Yeah.
Sure. Yes. But I think that the key missing ingredient there is like that lack of understanding. The reality now is that blockchains are a lot less exotic. They don't make people crazy excited. They don't make people think like, oh my God, this thing could take over the world. Like even the people in the show are not talking about it like that anymore. We understand what blockchains are. We understand what they're used for. We understand the kinds of people that are going to use them. I think we have a pretty good ability to draw the line out 5 to 10 years from now, the same way we did with early smartphones, and say, this is a useful technology. Here are the kinds of things you can do with it. More people will have it, and it will get bigger and more useful, but fundamentally in the same way that it already is in the first iteration of it, right? In 2017, nobody fucking knew what any of this stuff was going to be used for, right? We had such wild, crazy ideas about, we're gonna securitize all the stock markets in the world, and we're going to, every single business is going to launch their own token, and you'll have 1,000 tokens in your wallet for every business you interact with on a day-to-day basis, right? IoT devices are all going to be talking to each other using their own token. That's what we thought at that time. We had no fucking clue what people are going to be using any of this for. And then we invented DeFi, and then we invented stablecoins, and then we had, faster blockchains and all this stuff that we have today. Now, of course, there is a lot of speculation. Of course there is, but the thing, the speculation that's happening in crypto is much more self-conscious today than it was in 2017. In 2017, people who were wildly speculating didn't think that's what they were doing. They thought they were investing in technology, right? Today, people who are buying things on pump.fun, they are not deluded about what they're doing. They have a very good idea that like, hey, I'm playing a game. I'm hoping to get that 100x, and I'll probably lose most of them, and one of them hopefully will pay for the rest of them. That I think is the big difference. That is it just puts us into a different phase of the technology deployment and investment cycle than where we were at, 5-10 years ago.
Man, I really hope you're right.
Yeah. Let me move us into the next kind of phase of this conversation, which is the dynamic of this cycle is different than past cycles because there's actually return dispersion. So all the last cycles, everything went up and some things were higher beta than others, but everything either went up together or down together. And this is the first cycle ever in crypto where you're seeing where it's not that, right? So the winners of the cycle are what? Bitcoin, Solana, and Memecoins. Everything else, not a winner. There's like little booms, like Aave goes up, and maybe Uniswap goes up or something, but like they're kind of like little micro booms. How do you think about what happens in 2025? Is this just the cycle that's like dominated by Bitcoin, Solana, and meme coins, or does this roll over into the second half into the whole rest of the industry basically?
I mean, it's sort of reflexive. Oh, go ahead, Avichal.
I think it rolls. This to me is very this rhymes a lot with DeFi Summer. There's sort of this like corner of people. Remember all like the vegetable farms and like all the like crazy dot finances and everybody knew it was a giant sort of thing. And then meme coins are just that. Everybody sort of understands the game that they're playing, but it does create like this frenzy, and it creates this sort of like momentum. And then there is some degree of non-zero wealth effect. Like some people are big winners in that, and it creates sort of an echo boom, and then people start paying attention. And then because people pay attention, they say, oh, that thing over there is actually valuable. Bitcoin's actually valuable. I want that. And so money starts to flow. So I think we're kind of in that, which is I think we're in like DeFi summer where people are saying, oh, this is really fun. Let me go do this. And everybody understands the game they're playing. But what it's creating is a bunch of noise. So I think what you see next are in part because of what's happening on Pump.Fun, the media cycle kicks in, right? And so now reporters start writing these stories about like, look at all these crazy, Pump.Fun
Mm.
people like locking themselves in cages and doing crazy stuff. And then somebody writes a story about like, oh, look at this meme coin trader, it's like some 16-year-old that's now a millionaire. But then of course what that does is the opposite of what they think it's going to do, which is now like all of the other 16-year-olds and college kids are like, oh shit, maybe I could be a millionaire. And so then they start paying attention. So it has like the opposite of the intended effect. It's not like a cautionary tale. It's like, oh, pay attention. And then the whole thing starts over again. Like, this is why I really personally, I love reading sci-fi, right? Because like, even though the technology has changed, we now have different L1s and we have DeFi that actually works and we have stablecoins that actually works. Like the technology is all different, but the human nature hasn't changed, right? And so for like the last 1,000 years, right? Like human nature is basically the same. So I don't see why that's not going to play out the same way. It's just like this to me just feels like DeFi summer all over again. And actually the parallel there too is like there's some really interesting stuff coming out of the meme coin ecosystem, right? From like an infrastructure perspective or technology perspective or culture perspective. There's like really interesting stuff there, even if 90% of it is garbage.
What is the really interesting stuff?
Well, I mean, definitely stress testing the infrastructure I think is really, really interesting. And so like how much throughput can you actually get and how do these things work concurrently? I do think like this is what I always liked about NFTs too, is just sort of like this notion of micro communities. And so like all the stuff that Iggy was kind of playing around with, Iggy Azalea, which is effectively a meme coin, but it's sort of like this affinity thing. And I feel like that's kind of like we haven't quite seen what social looks like in crypto. And I think meme coins are like the closest that we have right now, which is like a group of people coordinating to do a thing. It's like a real money game / social thing where there are a lot of like small groups of people talking about these things. So I don't know what that becomes. It's sort of reminiscent. Maybe another analogy is like, it reminds me a little bit of F coin back in the day, where if you saw F coin, you're like, what the F is this? Do you remember this in like 2017? They invented liquidity mining, right?
How is this like F coin?
Because they invented liquidity mining. But if you saw it at the time, you're like, this feels like a weird like Ponzi thing. What the F is this? But then that sort of spilled into DeFi. Like that was actually a critical unlock where people looked at that and like, oh, that's really clever. I can use that to bootstrap liquidity. And so I think some of these like mechanics that the meme coin people are using around like how does onboarding work? How do you like, explain to people what's happening? How do you like even the notion of like the Pump.Fun feed is like a pretty interesting concept. It's so different than what you see on Coinbase, right? So for the first time, like the visual expression of what these things are is so different than like a price ticker, which all of a sudden to me is like way more interesting, right? So like some of these sort of like observations about how the UX patterns work or how to onboard people or how community dynamics work, I think spill over into real social. In the same way that F coin, I just wouldn't have predicted that it would have kicked off like liquidity mining for DeFi as a mechanic.
Well, so Fcoin invented trade mining. Liquidity mining was compound, but yes,
Yeah.
I think the point about social, I agree. I think it's very orthogonal from everything else happening in crypto, though. Like I don't see a lot of spillover from the meme coin people into other stuff happening in crypto because what they're doing is just a fundamentally different project than what most of the people who are actually building stuff are trying to do. Like people like everybody who's doing meme coins is trying to make money. There's nobody who's in it for the spirit or like trying to advance some bigger agenda. Like the whole spirit behind it is like this financial nihilism that nothing matters and it's all about just making money and getting yours. And like, yeah, I'm sure there's some subcultures that don't have that exact vibe, but you just see it with the rise and fall of these communities is that they rise and fall in price. And so I think it's fine. It's very clear that this game, the game of trading meme coins, is a really good game. It's probably, we talk about GameFi, it's the best game that crypto's invented.
Totally.
Is this like trading simulator, but with extremely high volatility, very, extremely easy to understand names. I remember on the NES, there was this game called like Stock Whiz or Stock. Do you guys know the game I'm talking about? It's like this really crappy NES game. It was awesome. Super shitty. But it was like a stock trading simulator. I remember playing it as a kid and you could buy shares of companies that like resembled real companies. So like there was a company like Pan Am, but it was called like Mam Am, and you could buy Yapple. And so like it was a trading simulator, but it was so bad. It was just so not fun. Like I compare that, like what people think trading is like, to like Memecoins. And Memecoins, it's just such a good game. It's so well designed. You know, it's so engaging. The ideas are so simple. Instead of like learning a stock and looking at balance sheets, you're just looking at a funny picture and like some schizos arguing on Twitter. And like that, it's so much easier for people to play that game, and it's so much more engaging. So I think like that is the best game that crypto's invented, and that game has gone mega viral. I think that's the right way to understand Memecoins, is that it is actually the big success story of GameFi. And the form factor was not, oh, you build like an MMORPG or a MOBA, and it's like an analogy to these other games that you like to play. The game that it's simulating is crypto trading. The game that it's simulating is like buying Bitcoin and Ether and Avalanche and Sol. Like that game is too much work now. It's not fun. The volatility is too low. You're going to lose money. But this other game is just like super high octane, fun version of it. And demonstrably, it's like way more engaging for people.
Was it called Wall Street Kid?
Yeah, Wall Street Kid. That's the one. That's the
Boom.
one. It's really bad.
Yeah, Haseeb, I think that's a good take. Actually, I've noticed. I mean, one thing that I've noticed from Blockworks employees is, you know, maybe half the company is like does things on chain and half doesn't. Now it's probably 90% of the company is doing things, are basically trading these meme coins, like just like almost after hour. I mean, probably during hours too, whatever. But like, you know, just like during the day, they're just like talking about these meme coins, and what it's actually forced them to do is they've all got a phantom wallet, right? They've all got comfortable very quickly doing things on chain, where like we've actually tried to get people to the whole company to do things on chain for years, and it just doesn't really work. It's like everyone's got a mandatory start a wallet. Like, no, you can't do that. Now, this has pulled a massive amount of people who otherwise wouldn't have been on chain. And
that's a perfect example, right? Like
yeah.
The second order effect of these things, and I agree, it's basically a game. And by the way, it is a real money game, but a huge part of the utility, which I don't think can be written off, is that games are fun, and there is some value that humans put on having fun. So even if people lose money, you know, like I think people understand that they're playing a game by and large. Eventually, people won't. But Yana, to your point, like, you know, this very likely gets like, I don't know, I'm going to pick a number, 250 million people to onboard into like self-custodial wallets. Like it's going to be like an astronomical number of people end up on, you know, MetaMask and Phantom and Magic Eden and like the bootstrapping, which then opens the door to the real productive stuff. I don't think can be understated, which is what I was getting at before, Haseeb. It's like, I think there's real spillover into like driving infrastructure with these things, which is why I don't think it's like net.
The way I would describe that is it broadens the install base, right? In the same way that NFTs got millions of people to chew glass, install MetaMask, get ETH into their wallet, figure out how to sign a transaction, do an approval, you know, all the stuff you had to do to get onto OpenSea was so complicated. And millions of people did it. And they were, you know, being advised by like TikTok tutorials and all this stuff, right? Now, obviously, Phantom has massively lowered that barrier to entry. It's a lot easier now to get into the meme coin trading game, whether it's on Solana or on Base or wherever it is that you're trading your meme coins. It's a lot more user friendly. The downside I would give, though, is that although I think it is the best designed game that crypto has made, and obviously the UGC element of it just makes it, you know, kind of perennially self-sustaining, right, compared to most games. The big problem with it is that I do think that it is too extractive. And the thing that most games do, and this is a thing I've said over and over, I think I said this on our last show as well. The thing that most games do is they balance the economy. Right, a game designer makes sure that, you know, you're sort of controlling the rate of like gold emission, or you're controlling the rate of bad guys popping up in or dungeons or whatever, so that everyone's having a good time and nobody's getting over harvested. Right, you're like sort of designing the whole game to maximize, you know, net player retention over time, or net dollar retention, basically, in terms of their the amount that they're spending. And meme coins don't do that because of the fact that it's all UGC. Everything, you know, it's like this game that every single tile of the game is owned by a different person who's trying to extract as much value as they can. Or the analogy I like to give, it's like a casino where every single slot machine is owned by some different person. And as a result, anytime somebody comes and sits on your slot machine, you want to get as much value as you can from them before they move to the next slot machine or like go play a game of craps. So the casino, because it internalizes the entire the spending pattern of the person there, it's like, well, I want you to leave some money left over after you're done playing slots, so you can come play craps and then have a drink and then go do this thing over here, and you end up maximizing the net dollar retention or the net spend for your users who are in the casino. And you only really get that if there's a single quote unquote central planner for the casino. And meme coins don't have that, which is why I think the meme coin game is going to end up being too extractive to be actually self-sustaining.
I actually, I'll take the other side of that. I think the market has solved this in a very elegant way.
How's that?
I've talked to some of our portfolio companies about this. I think the pattern actually, because this happens with every cycle, it's happened with like, Namecoin, it happened with ICOs, it happened with like DeFi. I think what happens is you get some sort of speculative thing where people are like playing this zero-sum game and it's not real net value creation. And they put money into it and they go up. Some people lose 60% of their money or 80% of their money. And the base thing that you have to go back to historically has been either Bitcoin or ETH, because you're on the exchange and that was sort of like the base pair. And it might now be Sol with the meme coins as well. And because those things are fundamentally valuable, then what happens is you like leave your dust. You leave like the 10% of money that you have sitting in Bitcoin or ETH or Sol, and you come back 3 years later, 4 years later, and you're actually up. And so you kind of like didn't lose money because like Bitcoin saved your butt or ETH saved your butt because you just like kind of hung on to it. And so I think for a lot of people, it actually is like an even better bootstrapping mechanism into like, don't do the stupid shit. Don't go play in the casino. Or if you do, like understand the game that you're playing and leave some of your stack in this thing that actually has like real long-term utility. And so it's actually like a bootstrapping mechanism, I think, for people to learn to hold. Especially the things that are truly, truly high value. And there's like a very, very small number of those. So think of it this way, like I think Binance and Coinbase get their butts saved because the base pairs are BTC and ETH, right? Like all those people that lost a bunch of money on a bunch of stuff, like maybe you hit it on some ICO or something. But I think a lot of people basically like ended up with some amount left in there and they're like, okay, whatever. And I think a bunch of those people get saved when the market comes back. You just sort of have this like 10 or 20% of the stack left in Bitcoin. And now it's sitting there and now you're like basically break even. And so I think it's actually a really interesting bootstrapping mechanism. I'd be really curious to see the data from any of those exchanges on like, it's kind of like the, have you guys ever seen the Schwab data or the Vanguard data, which is like the people who perform the best are the people who forgot their passwords.
Yeah.
They just never sell. And I bet you there's a huge percentage of these accounts on these exchanges that like did a bunch of stupid stuff, lost a bunch of money, had like 20% left over and they're like, fuck it. And then they just like left for 3 years and now they're coming back and BTC's at 100 and they're like, oh shit, I shouldn't have done all the stupid stuff. I should have just done the high utility stuff. Hopefully at least.
Well, it's a very sweet story. I'm a little skeptical that that's true. I mean, at least anecdotally,
Yep.
I know a bunch of people who bought NFTs
Yep.
and I don't know any of them who are like, man, I'm so glad I had 10% in ETH.
Yeah, but-
like I feel like I really
Yeah.
paid for everything.
I bet you a lot of those people that are doing NFT stuff were buying NFTs when ETH was like 1,200, 1,400, back in 17.
No,
And they ended up with a certain amount
vast
of
majority
ETH.
of people came in when the market was crazy. That's why the market was crazy.
Yes. And I bet if ETH works, if ETH goes to like 10K, they'll be like pretty close to break. I bet a lot of them will be pretty close to break even. In USD
If you
terms,
bought
not
ETH
in
at
ETH terms.
4K and you have,
Yep.
let's say 10% of your stack in there, you've got to
Yeah.
get ETH to 10x. ETH has got to get to 40K for you to break even.
Or your NFTs in USD terms have to like be, some of them have to be worth something, right?
Sure.
Yeah.
sure.
Avichal,
Like I still have my loot bags, right?
I'm
And I look
looking
at
at the punk that I bought for 125 ETH at the Pico top, and I'm
Yeah,
gonna have
It's
to
like,
sign off.
I got some
Well,
ETH
well,
dust.
Avichal,
did you really buy that when it was
Santi, just hold. Just hold.
dude,
4K?
I was tick top the punk floor. I was like, fuck it.
No, but in ETH terms or in USD terms?
125 ETH, and in USD terms, it was like $500K.
Oh, okay, yeah.
ETH was at 4,000 and change, and I have it as soon as I walk into my house. I have it there, and it's staring
Yeah,
at me and whispering at me like, "You're an idiot."
You have a hoodie, right?
Oh no, I'm not talking about that. No, the hoodie I bought for 79 ETH when
Yeah.
ETH was like 2,000. Before
go.
like the mania,
Wow,
before
wow.
6529.
Oh, so Santi, okay, so we have you here as a perfect
Use
guest
me
study. What do you
use
feel?
me as
What
the
is your
dummy.
lesson? What is your lesson when you look at that? When you look at that framed CryptoPunk, what do you feel like the lesson is when you think about that?
I bought it. I'm a collector, not an investor.
No, but here's someone who
I'll tell you. I'll frame it in the current context of why meme coins are just a better mechanism to what NFTs tried to do. You don't have the unit bias, you don't have the sticker shock. NFTs are ERC, or like just tokens and stocks on one end, and then you have NFTs on the far other spectrum. I would argue meme coins are like closer. Like this is the middle. They have emotional cachet, but they have a ton of liquidity, and they have like the unit buy, like it's cents, right? And so anyone can buy it. Not everyone can buy, unless you're fractionalizing an NFT, but it further has issues with liquidity fragmentation. For that reason, look, clearly people want to punt things, and I just think meme coins are here to stay. I want to believe that NFTs come back. I think they're going to come back super late in the cycle when you have the wealth effect of, as soon as people make money, they do a couple things. They open Zillow, they open Chrono 24, and then they open Magic Eden, OpenSea, Tensor. And I think it's going to be still very niche kind of. I don't think that the newcomers are going to like want to punt NFTs as much as like old school crypto wealth that wants to buy punks. You know what I mean? Like,
that's actually a very interesting point, Santi, because I think what happens is that, so the new money right now, if the new money, like the people who made their fortunes on meme coins, right? They're the sort of the new generation of wealth in crypto. Those people, if they go buy a crypto punk and make that their wallet, it's almost like they look like their parents. And it's just like the cringiest thing you could possibly do is like have your parents dress you. But 2 generations from now, then it's going to be retro. Then it's going to be like you're signaling that you're a true OG because you know that 2 generations ago, this is what people were buying. So my guess is going to be the meme coin cycle is going to be like, yeah, NFTs are cringe. Like these are stupid. There's no way we're going to spend our money on this. And this generation, 4 years from now in the next cycle is going to be all about the meme coin, about the NFTs.
But you invert to today, Haseeb, and you're like, God, I mean, that's the compounding effect of you holding that NFT. Like, I guess if you have the NFT now, do you sell now? If there's a material, let me ask you a question. If there's a slight pickup in the floor, you have to clear a lot of people that are in the red, which is another component to this dimension. And if everyone thinks like you, then you almost like want to sell almost immediately to then rotate into the meta, which is AI coins, NFT, memes, and the whole different derivatives and types of memes, and then just like other stuff. You know what I mean? Like the scar tissue of the people that bought the NFTs is very strong, and like gaming tokens have this issue too, right? Like these narratives of it may be a broader conversation of like, as you think about narratives, like the gaming narrative, challenging, man. Like a lot of people got burned with Axie, the guilds, the play to earns. People love punting new shiny toys. At some point, the market overcorrects and totally, it's just a price thing. I even look at like in my portfolio, like tokens that are launching in certain verticals that are really out of favor. No, there's zero demand for them, like zero.
Scale is the blockchain that is simply built different. Let's face it, other L1 networks have costly transaction fees that increase as the network gets busier. Scale has solved this problem with a gas-free, scalable infrastructure where users never pay gas fees. Scale was awarded the most active gaming chain in 2023 by CoinGecko and hosts 5 of the top 25 games on DApp Radar. You should definitely check out Scale. I was using it the other day. It really is incredible to use. That's Scale, spelled with a K. Hit the link in the show notes or head on over to skale.space/ecosystem to get started today. Hey everyone, Jason here. I wanted to take a second to break down why Magic Eden is getting into token trading. Their team is extremely concerned that crypto is still consolidated in the hands of a few centralized exchanges who act as gatekeepers, ultimately recreating the TradFi space. They believe that crypto is still missing an on-chain Binance, and their aim is to move trading completely on-chain, fully decentralized. They've done $6 billion in NFT volume in the last 3 years and have had more than 1.4 million users visit their platform in the past year, making them the #1 NFT platform in the market today. They are the ones that can do it. Stay up to date with Magic Eden's journey by giving them a follow on X @Magic Eden. Uniswap Wallet is designed to easily manage, store, and swap your crypto all in one place. Access thousands of tokens across Ethereum and 10 plus chains, including Base, Arbitrum, Optimism, and more. Uniswap's wallet has built-in MEV protection and zero gas fees with swaps that go through Uniswap X. You can also swap with the peace of mind that the code is completely open source and independently audited. Download it today. It's available on Chrome, iOS, and Android. Hey everyone, Jason here. Wanted to just take a quick break and highlight everything that's been going on in the Mantle ecosystem. In just 1 year, Mantle has seen its TVL surge by over 1,100%, now reaching $1.69 billion. That's just such a crazy amount to think about. More than 225 protocols have made Mantle their home, while the platform's Eco Fund has invested $38.5 million in 51 pioneering projects. Through strategic partnerships with Bybit, including MNT as collateral, supporting Athena to scale, and the first Ethereum L2 to integrate Ondo Finance, they just continue to be on the bleeding edge of L2s. Be sure to stay up to date with what's going on by giving them a follow on X at 0xmantle. Special thanks to the incredible Mantle team for sponsoring today's episode. Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. For Black Friday only, Ledger is offering $70 in Bitcoin if you upgrade to the Ledger Flex. You can also save up to 40% on selected Ledger Nano wallets and accessories. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Offer is only valid until December 5th or while supplies last, so be sure to hit the link in the description of today's episode so you don't miss out on this really good deal. Wait, let me ask something about that then, which is related to these meme coins, but more about how it impacts the dynamic in both tech and venture, where it's like, or in tech and crypto, where it's okay. You got the venture back model. Big LPs give the GPs the money. Venture invests in all these new founders. They go build things. They launch tokens. It works. Some of their employees go build new things. They raise seed rounds, and it's this like beautiful cycle that builds technology for the last 30 years. And meme coins are kind of breaking that, right? Like, Santi mentioned the AI cycle. It's like, it's not Render and Akash and BitTensor that are ripping, which are like these venture-backed businesses that have great founders and have launched tokens and have employees. It's like these random AI meme coins. Or, I mean, basically it's sucked all the juice out of, honestly, a lot of...
So, okay.
I
totally do not buy the story.
Yeah, you
completely don't buy the story. Yes.
Well, you guys don't, but you don't buy it because it's your. I mean, I would argue your business is being hurt by these meme coins, like venture firms.
You're absolutely. Clearly we're not being hurt, right? Like if you look at just the amount of people who are coming on chain because of meme coins,
right?
It's like arguing, again, if you think of meme coins as this game that has gotten tremendous
I agree with that. Yes.
Yeah, it's bringing demand for blockchains on chain, right?
Yes.
Now, there's this argument that many people have made of, it's like this revolt of the public, and it's like this kind of we're throwing off the shackles that the VCs have placed on us, and we're buying our own tokens. I think this is just complete nonsense. It's just complete fucking nonsense, right?
Haseeb,
it's a game.
We hear it every cycle, right? Just for context.
100%, right? Like every totally. Same thing we heard with the food coin. Same thing, every fucking time we hear the same story. It's not about VCs. It's really about technology. The question is crypto about technology, or is it about just trading speculative tokens and seeing the prices go up and down? Meme coins are about that, because meme coins are this very fun simulacrum of trading that is, this frenetic, high energy thing. And of course, retail loves it because it's designed to be lovable. It's designed to be fun. If you look at what are most people doing when they're trading on Binance? Are they mostly trading meme coins, or are they mostly trading like other stuff, like what we think of as tech? The answer is that about 2 months ago, before Trump won, about 15% of Binance volume was meme coins. Okay, now that's gone up a lot. Do you know what it is today? It's about 23%. It's not the majority of what people are doing. What most people do when they buy crypto is what they think they're doing is they think they're investing in technology. Like, people are obviously investing a lot into XRP, into Cardano, into stuff that, I don't necessarily think is the most exciting technology in the world. But when they do that, what are they doing? What are they telling themselves? They think that, okay, this is the co-founder of Ethereum. This has great technology stack. They're going to build this new stuff. They think they're investing in technology. That is their lived experience of how they understand the enterprise they're engaged in. That most people don't want to invest in meme coins. Most people don't want to do this nihilistic thing of, I'm just betting that this thing is going to go up and down, because they don't actually think they're gambling. They think that they're investing in the future. That's what they've been told. That's what we're telling them. That's what you're telling them, is that, that this stuff is, that's what Donald Trump is telling them, and they believe it. So that's the first thing. The second thing is that, this claim that this is somehow bad for our business. So obviously there's the downstream effect is that, okay, well, this increases the bid for every single layer one, for every piece of infrastructure, has to get bigger in order to accommodate all the meme coin demand. But second is that I don't see any way in which it's zero sum. If you look at the coins that were pumping over the last week, obviously, some meme coins have done well. XRP, Stellar did well. Grass is doing well. There's, Near is doing well. AVAX is doing well, which we're investors into. A bunch of stuff is doing well. It's just not the case that only meme coins are pumping. Now, what is pumped the most? If you go, sort by 30-day performance, yeah, you're going to get, Peanut and some other random stuff that just rocketed to the top of page one.
But Haseeb, can you? I'm gonna have to drop in a minute. But can you guys just talk about when we say pump? It's like, okay, in absolute terms, but talk about the weighted, the volume behind the pump. The amount of money, the flows into it is far more interesting to me. I understand that an asset can go from 15 million to $1.5 billion. But let's talk about Ripple at $1.50. Cardano, Doge, putting Doge aside, the 5% increase in these assets is vastly more from a flows perspective that I would argue it's who's buying that? That's what I want to know. It's and how is it that some assets have transcended into this god tier of to your point around how the internet captivates the imagination. Cardano hasn't shipped and will never ship because once it does, it no longer captivates the imagination.
Well, this goes back to my earlier point. Is I don't think people, I don't think the market is actually well educated on these things yet, right? I think most of the money that comes in, to Haseeb's point, actually comes from people who think they're investing in technology, but are not able to actually underwrite the fundamentals on that technology, and they end up in these situations where they then are pouring money into things that will have price movements, but the fundamentals won't support it, and then that has to correct at some point, which goes back to kind of the earlier conversation we're having. Jason, to your question around the meme coin stuff, yeah, I think I've been pretty consistent on this. Is I actually just tweeted about this. I think about crypto as having three very distinct stages, and a lot of the technologists actually jump to the third one. The first stage is the casino, the second stage is the capital markets, and the third is the computer. And a lot of technologists that are here in the space are here to build this decentralized permissionless computer that anybody can write code on and ship, and we can run all these apps and all that stuff. But I think the path to getting there is through the casino and through the capital markets. The casinos, the ICOs and the meme coins bootstrap all the infrastructure. That's what creates the demand. That's what gets people on board to the wallets. That gets them comfortable with smart contracts. And then people realize actually the utility of this stuff is capital formation. The thing I can pool money and pursue opportunities in ways that I couldn't before. And that's, Bitcoin or Ethereum ICOs or DeFi liquidity mining or DPIN. It's these are bootstrapping mechanisms using global capital to get real fundamental utility off the ground. And once that's working, we can use that to actually go build fundamental computational infrastructure, which we've already started to do. And then that's the final stage. And I think a lot of the technologists are operating at level 3 right now. And we're actually, somewhere between 1 and 2. We got to get through the casino and bootstrapping of the capital markets with stable coins. And we'll eventually get to number 3, which is why I continue to think we're not at the point of valuing things on fundamentals. I think we're still in the casino. And I think that persists for a few more years. I don't think that's a short-term thing. It'll take us a few years to get through that.
Yeah. What do you guys think about ETH right now?
I continue to be, we're actually working on our developer report right now. The annual Electro Capital developer report that we do, and I won't blow any of the surprises, but ETH and sort of ETH plus, I think we're going to call it, which is sort of the broader ETH ecosystem. When you look at OP and Arbitrum and Eigenlayer and all of these things that are sort of components of this whole stack, continues to have a lot of developers. It's been the number one ecosystem from a developer perspective for a long time. And if you're looking at fundamentals, like we have long held that looking at where the developers are actually spending their time is the best leading indicator for where value is going to get created, which is why we do that report and try to do this analysis. And ETH continues to perform phenomenally from that dimension. Like it continues to have such developer mindshare. Solana, for what it's worth, is also doing exceptionally well on this. This is one of the things that gave us a lot of conviction in Solana in the bear market, in 22 and 23, kind of like after the FTX crash. You could look at the developer numbers and you could see that they're actually very engaged long-term developers that were not going anywhere, which then I think turned out to be phenomenal signal, actually, that there was real value that was going to get created there. So when I look at that fundamental signal, which is one of my favorites to look at, it continues to do quite well, actually. And for all its, there are all sorts of challenges, there's all sorts of flaws, there's all sorts of messiness with it, but it does feel like there's some sort of network effect there at this point around EVM and Solidity and that infrastructure. Everything from custodians to exchanges to auditors to there's just so much infrastructure there now. I think it's going to be quite hard to displace.
Yeah, the point that I make here, and I think Avichal alluded to this when he mentioned the ETH ecosystem, or I don't know what the word you put, but this broader family of layer 2s and things like Base and everything that's EVM based that rolls up into the Ethereum world. I think what we're seeing is something we used to talk about a lot, but we didn't take that seriously. But now increasingly you have to take seriously is the distinction between Ethereum and ETH, the asset. And it feels like that is the biggest dagger in the heart of ETH holders this cycle, is that the Ethereum ecosystem has never been doing better, and ETH, the asset, has never been doing worse on a relative basis. So I don't know that this is likely to change anytime soon. Like if I had to bet, I don't know many people who are actually bullish on ETH Sol this cycle. I think ETH almost certainly is going to go up over the course of this cycle, but it feels very difficult to imagine how it outperforms Solana, given that Solana has caught up in so many metrics that I thought were just going to be insuperably large gap for Solana to make up. And Solana just keeps outperforming, just keeps getting better and stronger. And in previous cycles, Ethereum didn't really have a plausible competitor. The question was not, is Ethereum, the question for Ethereum's valuation was mostly how big can smart contracts be? That's fundamentally what Ethereum was being valued on, was like, how big is this story? And Ethereum was this sort of proxy for all smart contract demand. But now that's no longer true. And I think markets are starting to wake up to the fact that L2s are, in a large way, obviously parasitic to Ethereum, in that many of the fees that would otherwise be attributed to Ethereum are getting displaced by L2s. I think it's not completely parasitic, like there's some degree of mutualism where both of them benefit from each other. But clearly, if you think of the alternate universe where Ethereum had eventually shipped its sharding roadmap, and you imagine that today we had many different shards of Ethereum that all interoperated with each other, all of which ran the EVM or EWASM for that matter, and all had this kind of redesigned execution environment, we'd be living in a very different world with respect to how Ethereum would be capturing value and the relationship of rollups to Ethereum, right? Ethereum would not be, there would not be so much insecurity and so much anxiety in the Ethereum universe. There wouldn't even be, this whole thing about the beam chain, this new Ethereum 3.0 quote unquote redesign, in a way is a concession of the fact that the Ethereum rollup centric roadmap was a mistake, that it caused a huge amount of value leakage away from ETH, the asset. And ETH now has to compete on some degree with the rollups, right? Like, why are we now moving to massively increasing the scalability of the layer 1 when in reality, if you want to extract more revenue from rollups, the way you do that is actually by constraining block space, not by making more. So the overall picture that I get is one where Ethereum. The thing about Ethereum, and I think it's not just Solana that is putting this pressure on Ethereum. And it's not just the rollups. It's also things like Unichain, where you see this almost this defection, where Uniswap, of course, huge contributor to all the TVL and the centrality of DeFi on Ethereum. If Unichain succeeds in its ambition, right, what Unichain is described is that eventually they want to get all the Uniswap trading volume, or as much of it as they can, onto their own chain and internalize the MEV and give it back to Uni token holders, right? Makes total sense. Very rational for Uniswap to want to do this, given what a huge contributor they are to the MEV on Ethereum. Well, if they succeed, you can imagine, it's not implausible that Unichain could successfully move over enough of the demand side that the liquidity starts migrating away from Ethereum over into Unichain. And pretty soon you sort of get this big, gigantic sucking, just this vacuum that pulls the TVL off Ethereum onto Uniswap or onto Unichain. And if that happens, I have no idea how Ethereum could recover, right? It's like this gigantic super tanker that is designed to move very, very slowly because of all the assets that sit inside. And it's rational for it to be very cautious and meticulous and careful with how and when it moves. But we see how fast liquidity moves in crypto. And if the incentives flip, you could see a very, very violent downturn to ETH asset. Now, again, I'm not saying that this is likely. I think it's actually very unlikely. I think most likely Unichain is not going to have the sheer force of will to work that hard to try to suck up all the liquidity from mainnet. I think they're going to be too risk averse. But I think what this thought experiment illustrates is that there are so many ways in which Ethereum can lose the mantle that really were just completely unimaginable 2-3 years ago. And that's, I think, why you're going to see Ethereum have a much harder time outperforming other assets that are in the same tax bracket. Like those risks are not going to go away. I think they're probably only going to get bigger as the cycle gets more and more crazy.
I mean, in some sense, it had to be that way, right? They were just so dominant on every metric that there was no
maybe
so much market share. It's just like there was no alternative. So I think this was in some sense inevitable. The other thing I'll throw out there, which I think most people know, I think is a really, really hard thing to replicate. Like even if Unichain were to go down this path, which I agree they probably won't. The thing that Ethereum has right now, which I think is very hard to replicate, is credible neutrality at a global scale, and the resulting regulatory clarity. And so if you're thinking about businesses that need to clear stable coins, if you're thinking about cross-border anything, if you're India or Turkey or Brazil, any country in Europe, and you're like, look, I'm a little worried about the US system. Like, do I really want to be subject to US banks? And do I really want to be subject to US law? And I don't love the Chinese system. Like, do I really want to be subject to Chinese banks and Chinese currency risk? What do I do? And what you really want, I think what the world really wants, is a US dollar denominated system that the US government cannot unilaterally kick you out of. And that's really what Ethereum is. And it's the only thing that right now has the claim to that. I don't know how that gets valued.
Why is it US dollar denominated?
Say it again.
You said it's a US dollar denominated system?
Yeah. ETH, I mean, like the currency pair is fundamentally dollar. Like the stable coins dominate everything.
Stable coins. But I mean, but stable coins are under the domain of the US.
Sort of. I mean, like Tether is offshore, right? So it's sort of like arm's length. It's like the US government could go to Tether, but there's like some hops there. And then you could also take your Tether or USDC, you could put it into a wrapper effectively, right? Like a Frax or a Maker. And so there are ways to get like layers of indirection there that it's not so unilateral. And if you think about it, like what a lot of the world wants, that's actually, I think, what the world wants. And so I think what you end up with is this sort of third credibly neutral place for the world to settle trade and settle business and do business in a US dollar denominated system, which I don't think we're moving off the dollar as the unit of account of the world. That the only thing that currently has a real shot at that, I think, is Ethereum. And in part, it's sort of like it snuck through that window, right? It got through that regulatory clarity in 2018 and established itself as credibly neutral. That, I think, is the thing that is like very Lindy and very, very hard to replicate. And so I think everything else,
I think that argument was more true before Trump. I think Trump creating this door that all the other layer ones can walk through to basically share the same status with Ethereum of having this, like, hey, this thing is a commodity. It's going to be treated fairly. It's going to get access to the same capital markets that Ethereum has. I think it just makes it that, as time goes on, you talk about Lindy, right? Yeah. The reality is that the distance between these assets shrinks over time as they get older. So what I mean by that is that, okay, Solana is, what is Solana, 4 years old, 5 years old? 4 years old, right? Okay, it's 4-year-old asset. Ethereum right now is 9 years old. In 5 years, Ethereum will be 14 years old, Solana will be 9 years old. In 10 years, Solana will be 14 years old, Ethereum will be 19 years old, right? And like the differences between these two shrink over time. They just become less salient of like, oh, this one is like the real Lindy one and the other one is like this newfangled thing. All of these things diminish in their valence as the whole space gets more mature. And so I'm, again, like I think the period for which that was true was the last 3 years. For the last 3 years, everything was brand new. Everything was broken. Nothing was really stable besides Ethereum. But the longer we go, the less true that is. And the more markets are just going to say, look, I mean, the other thing that I think also gives me pause about this story is that we've just seen it more and more over time. Most people's interface to crypto is not Solana, it's not Phantom, it's not Ethereum, it's not MetaMask, it's Binance and Coinbase, right?
Yeah.
That is most people's experience of interacting with crypto. So if that's true, like most people who are paying each other with stablecoins, I mean, okay, yeah, they're using Tron, whatever, but they're not even using Tron. They're using Trust Wallet. They're using Binance Pay. They're using these other things that to them represent the crypto front end that they actually trust. And if Binance Pay is basically like, hey, we're going to start settling things on Solana now because it's faster and cheaper and it's more liquidity or whatever it is, I don't think most users will care. I think like the whole goal is to abstract all these details away from users so that they don't have to care about this stuff anymore. And I suspect they probably won't as this stuff gets bigger and bigger and more world scale.
So I think the Trump argument is, I think that's a good point, actually, that like that might change the window. And I agree with you sort of over time, like the sort of resolution changes between these things. I don't think it's so easy to move off of some of these things. I do think liquidity network effects, it's sort of the same reason that I think the legacy banking rails just have so much lock-in is like once businesses start integrating here, once you get like a multitude of front ends, then you removing yourself, like in the early days, Binance or Coinbase might have so much market share that they can just say, oh, I'm going to move off and I'll switch to Solana or I'll switch to Tron or whatever else. And my users don't care. Over time, I think that gets harder and harder and harder as the ecosystem gets more and more robust. That's not to say Ethereum has definitely won that, but I think that's a thing that the market doesn't quite understand is tremendously valuable because it's not really an end retail thing. This is like, how do banks move money around? How do governments move money around? How does like international trade and finance work? How do the BlackRocks and the Goldmans of the world operate? And I think that network effect is a behind the scenes infrastructure network effect. Again, I'm not saying that means ETH is worth 40K or anything like that. It's just like, I think there is something really valuable and unique about that, which I don't think the average like retail buyer of crypto assets really sort of appreciates or understands. Like how many of those people understand how like the Eurodollar system works? Or like, how Swift really works? Like nobody, right? But that's like, that kind of stuff is like the backbone of the entire GDP of the world, right? That stuff is super critical infrastructure. Again, no commentary on what it's worth, but I think it's underappreciated.
Completely agree with you. And I think the modal outcome still is that Ethereum maintains its lead as being the number one chain, 3-4 years from now. But I think if you asked me 2 years ago, you'd say, what is the likelihood that Ethereum is not the most important chain in 5 years? Yeah. I'd say the chance of that was like less than 5%. Today, I'd say the chance is probably at least 20-30%, if not more. I feel and that should really affect the valuation of an asset.
Well, I think the other thing which we've talked about, I think in the past, is I think people don't appreciate. There's like this set of cognitive biases that get in the way, which is why I think venture capital is both a hard business, but why we get professionals in the business, which is like, these are low probability outcomes. Like what is the likelihood that something can actually displace ETH or that ETH wins ultimately? Two is you're talking about such large TAMs, right? Total addressable market. So when you're talking about 5 billion people and every business in the world doing a thing, you're talking about trillions and trillions of dollars. And our monkey brains are not wired to handle these large numbers. And then the third is exponential growth, right? And so we're not wired to think about what happens. We're so early in the evolution of these things. And so I think like the market structure at the end of this as well is not, like Solana wins and ETH loses. It probably looks a lot more like social networking, where like Facebook can be worth $1 trillion, but TikTok can be really, really successful, and LinkedIn can be worth $100 billion, and you get Kakao Talk, and you get international regional winners, and you get Telegram, and you get Twitter. And so like it's also not zero sum in that way either. Like I think there's actually an outcome here where these things actually coexist, and they're all actually significantly more valuable than they are today, just because the way the markets work.
That's
which
true,
I think,
but then
it's like not zero sum in the same way.
Yeah, but I think the biggest risk to Ethereum is that Ethereum really risks becoming Intel. Like if you think about like Intel versus AMD, right? Once upon a time, it was Intel might have acquired AMD. Today, AMD might acquire Intel. It's like this complete reversal, and it's in large part Intel once upon a time was the only option. Like there was no alternative to Intel. And over time, the big weakness, and I think you see this in Ethereum, blockchains are still too dynamic for Ethereum to be done, for them to put down the pencils and say, we made the perfect thing. We have all the TVL. We all we need to do is be even more credibly neutral. We need to pile on the credible neutrality and just like innovate in culture and innovate in like how great stewards we are of the tremendous ecosystem that we've built. And I think that works when you are the monopoly. But if your monopoly starts to even be slightly threatened, then I think everything depends on you being able to out-execute your adversaries. And Ethereum very clearly does not have this psychology. And this is part of the reason why social media, is full of people kind of trying to diagnose what's wrong with the Ethereum roadmap / ecosystem / whatever marketing. I think it's even more fundamental than that, which is just that Ethereum had this like Intel mindset, which is that we've won. All we got to do is keep doing what we're doing. And the landscape has shifted. It's very clearly shifted. And when the landscape shifts, if you do not remember how to like roll up your sleeves and write code and to innovate and move fast and potentially disrupt yourself, somebody else will eventually disrupt you. Now, it's not guaranteed, and it could take 20 years, but it does feel like that's the path that Ethereum is risking being on. Like if Ethereum had just said, you know what, we're going to go back to the sharding roadmap and we're going to ship execution environments and we're going to do all that stuff we said that we're going to not do, right? Why did they say they're going to not do that? The reason why they said they're not going to not do that was because they said, we are too slow. We're not going to get there in time. The rollups will get there faster. So let's just embrace the rollups, right? It was an admission that, hey, it's not even worth trying. We're just too slow. We're too much of a behemoth. It's like, Intel just basically saying, look, we're not going to bother doing GPUs because, whatever, it's too hard. Also, it's a small market. Like, who cares? We'll let other people do that. We're just going to be Intel. We're going to own the processor because, that's where all the value really is made. And at a certain point, the world shifted. Now, again, I'm not saying that for sure has happened, but I'm saying that there's definitely much more of a risk that we'll look back in 5 years, and that's how we'll write the history books. And I think Ethereum, the DNA of Ethereum is such that it's very difficult for them to change that mindset. And clearly, people in Ethereum, if you tell Ethereum core devs this, it's kind of blasphemous still to claim this, because they're like, no, that's not what Ethereum is about. Ethereum is not about the ETH price. Ethereum is not about competing with Solana. Ethereum is about creating this very specific thing that we all agreed to create, this World War III resistant, trustless, decentralized ledger. That's all that Ethereum is trying to do. You want it to be this, big competition for price with Solana, but that's not what we're trying to do. If you want that, go buy another asset, right? That I think is largely the answer that Ethereum has given. And I get that, and I respect it, but it also has to then acknowledge that, like, hey, all this price talk about, hey, Ethereum down bad and people being despondent about the price of the asset, they can't then be surprised that that's the reaction that they're getting.
Maybe as we think about wrapping this up, I'd love to get your guys' take. I know this is your professional job is making 5 to 10 year bets, but as you think about the next 3 to 6 months, one thing I've been thinking about is these events in time that pull forward growth. So how the market should go maybe is like this, right? Like a slope of 1, but something like the Bitcoin ETFs caused the price of Bitcoin to go from 25K to 75K in 6 months. So it pulls forward this growth, and then the ETFs, when you pull forward growth, you have to get this long consolidation period on the back end, which is what we saw actually in most of the year. I think people forget. And I think actually my take is that the Trump election is a similar moment to the Bitcoin ETFs, where it pulled forward a lot of that growth. And then outside of some outsized event like a Bitcoin strategic reserve being announced, I actually think you could see just consolidation for the next 3 to 4 to 5 months, and then back into another big bull leg higher, maybe in Q2. But curious if I know none of the three of us are really traders here, and this isn't the game that we really play. But yeah, just curious how you guys think about the next 3 to 6 months.
Sure. Haseeb, you should go first so I can disagree with you.
Yeah, I honestly, I have very low confidence as to what happens from here.
Yeah.
I think it's very likely that prices are going to go up more. I think clearly 100K Bitcoin is like this kind of magical barrier that the market needs to cross. Once it gets there, I don't really know what happens. I can see two worlds. This is kind of useless commentary, but one world is that we've kind of overestimated how exciting it is that Trump got elected, and that when you actually see the real policies, not the imagined policies, when you actually see, okay, a real new SEC commissioner, not the imagined SEC commissioner, it's kind of okay, well, these people are still politicians, they're still responsive to the banks, they're still responsive to Treasury and FinCEN and all this stuff, and the rules are not perfect, they're better, but they're not perfect, and you just end up with this thing of okay, well, crypto's up, but it's not okay, everything's going to melt up indefinitely for the next, millennium. So I think there may be a little bit of overexuberance about Trump. At the same time, like the other thing that just is kind of obvious is that so much of crypto in the short term is oriented around spotlight effects. And the spotlight effect is just when everybody is looking at this thing, the price goes up. So if there's a meme coin that's making the headlines, price goes up. If there's any token that people start paying attention to, price goes up. So there will be a lot of spotlight on Bitcoin for the next 6 months, as there is a talk of strategic Bitcoin reserve and other countries starting to think about their own Bitcoin strategy. China having conversations about, hey, maybe we should soften a little bit on Bitcoin. Just even the rumors of these things is going to drive more headlines and more attention. And then just Bitcoin being over 100K, a lot of people will talk about that for a very long time. And all these conversations that people have had of reboots of conversations they had in 2021 will all have to happen again. And that will cause more people to just buy Bitcoin. Eventually that ends. And I think that probably ends after the strategic Bitcoin reserve stuff is done, right? So my guess is like that's the big milestone. And then the other big thing is Doge, which is that the Department of Government Efficiency is going to be extremely controversial. It's literally the most one of the most famous men on earth, trying to cut down the biggest government on earth and fighting against the deep state and like all this stuff that he's obviously going to play all of this out in social media and on the front page of the New York Times. So this is just going to cause huge amounts of attention on Doge for at least a year or two. So I think all of that stuff is going to mean more attention, and more attention probably means more dollars. But where does it go? Where does it top out? What's the shape of the cycle? I honestly have just absolutely no idea.
Yeah, I have no idea. It's so hard to know because it's so event driven and so news driven, and who knows. And I think in particular the sorts of people that are really driving the news cycles right now are themselves so unpredictable. And so all you can really imagine is that there will be a whole host of unpredictable events, and that's just like that moves you violently in one direction or the other. Like I don't think this is my only sort of base belief is I don't think it's very slow and steady. I don't think it's like very linear. Even if you have like a
Yeah.
consolidation period, I think
Yeah.
like the movements on the way up and the way down are just going to be like
Yeah.
pretty volatile given who's involved and what's
Yeah.
driving the news cycles.
How there's a debate, there's an Empire Telegram channel, and there's a debate last night about how impactful new SEC without Gary Gensler is, and how impactful Trump instead of Biden actually is. And people were talking about like value accrual to DeFi and turning on the fee switch, and other people were arguing like, hey, look, we made it out of FTX, like Coinbase's stock is doing well, and BlackRock's in Bitcoin. Like actually, like the old guys weren't as bad as people thought. And just curious how you guys, maybe from the lens of like you talk to founders all day long and they make decisions all day long about what products to build, and do they build them in Dubai or do they build them in New York City? Like how impactful do you really think this is? And like what is possible under this new regime? Like is the impact about tokens? Is it about product decisions, about location of where they build? Like maybe as we probably the last question here, like just curious to get your guys' take on that.
Oh, I'll take that one first. It was huge.
Yeah.
We talked to about a dozen founders immediately afterwards, in the week after, and it was like night and day. Literally founders that had moved to Dubai were like, okay, I'll move back. There was a sense of, oh, maybe I could offer my product to US customers. There definitely was this like, okay, maybe token models might make sense here again. And that's like worth exploring. And I think that's been that sort of search space of how do we create value and then capture it and distribute it back to people. That whole search space, which I think is fascinating because we have this like very narrow definition of how equity works in the world today. I think that whole search space opens up. I think it's really hard to overstate the importance of what the backdrop of a regulatory environment does to an industry or to founders. And it's if you're constantly living in fear that some person, some agency is going to show up at your door and then like threaten to shut down your business, the cascading effects are like, well, now I have to go get through lawyers, then I really shouldn't do this thing, and it just sort of pushes you subtly in a particular direction and in a risk averse direction, and you just don't do things. And as soon as you remove that friction, I think it opens up the floodgates in terms of what people will do. And I think on balance, that's really good. So I think it's even if the next, let's say the next SEC commissioner is roughly in terms of beliefs, like moderate. Let's say they're not like mega crypto bull. They're just like, look, we should be smart about this and we should embrace it. that alone is a huge win, because knowing that the SEC will actually engage with you and have a conversation with you, and wants to try to figure out how to make it work is such a win, in terms of actually making innovation happen. Like I don't think the effect can be overstated. I think it's actually pretty dramatic.
So, in the spirit of ending the show, I will disagree with Avichal's last statement, which is that so you can sort of separate it into the micro and the macro, right? And the micro is what Avichal was talking about, of like, what's the effect on founders, what's the effect on products, what's the effect on the individual decisions that people are making, and whether to offer things to U.S. customers or to turn on fee switches. I think actually that stuff matters very little. So like, founders coming back to the US, it's like, whatever, they were building their startups just fine in Dubai. A lot of founders are still in the US. They were even during this, under the realm of this SEC. And if you look at fee switches, I mean, fee switches are a perfect example, right? When a DeFi project turns on a fee switch, token goes up like 15, 20%, right? This is not a, like, oh my God, now fundamentally this thing has value, before it didn't. It's good, like markets like it when you turn on a fee switch, but it's not a 2xer, right? It's not like the fundamental difference between being valuable and not being valuable. And the other thing I'll say is that I think for Americans, I don't think that many Americans have that much to gain from using DeFi products, right? Americans already have extremely open financial markets, and they can basically buy whatever the hell they want. And most of what they want to buy is investments. They want to invest in this stuff. They don't actually necessarily want to use these products. I think it's outside the US that the vast majority of actual demand for this stuff is, right? Of people who do want to use DeFi because they don't have financial freedom, right? Most human beings in the world do not live under conditions of financial freedom. Like just take China and India, which are the two largest countries in the world. Both of them have very restrictive capital controls, very restrictive financial controls. Like, you can't just go buy whatever you want and have whatever investment portfolio you want if you live in either of those two countries. So now on the macro side, so the micro is like, okay, what individual decisions are founders making differently? My guess would be that if you fast forward to a year from now, you'll see founders being more aggressive. You'll see founders opening up to, giving airdrops to Americans and marketing in the US and taking out ads in the US and stuff like that. But I don't think it's actually going to change that much of what are the core things that crypto is doing. I think what does change a lot is that crypto is fundamentally about Schelling points. It's about getting everybody to agree that, like, hey, we should all use Bitcoin instead of gold. How does that happen? It happens from people coming to consensus, right? It comes from saying, hey, we should be using stable coins instead of Swift or instead of Eurodollars, right? How does that happen? It comes from people coming to consensus and deciding to use the same thing. And so much of why that happens at the scale that we're now talking about is just people believing that if I do this, it won't get shut down. I won't go to jail. I won't become a political enemy. I won't, it's like just risk committees and just people who are scared or skeptical because they see what's happening in the news and they see the front page of every newspaper in the world talking about FTX collapsing and how Biden is trying to get these people shut down and get them criminals and scam artists and blah blah blah. All this stuff helps tremendously in making crypto feel less weird, more normal, easier to adopt, easier to integrate into your accounting systems and your ERPs and to use for cross-border payments and financial settlement and blah blah blah. You just will see this stuff all getting baked into the bread because it's just not a big deal anymore to use it. Whereas 2 years ago, it was very weird for you to be using crypto. You just saw it from the cratering of willingness from the Fortune 500 to do anything related to crypto. I think what you'll see is over the next year, that's going to skyrocket. And these companies very often are the intermediaries that actually put the stuff into the hands of users. So that's the thing I think that's probably going to have the biggest knock-on effect, not people in America directly using crypto products to a bigger degree than they were before.
Gents, another good one.
Good to see you.
Thanks for having us.
Thanks, Mitchell. Thanks, Haseeb. Hey everyone, thanks for watching today's episode. Just wanted to quickly thank today's title sponsor, Skale. Skale really is one of the best chain experiences out there today, and I've used so many different chains. There's a reason they are gaining so much adoption in both gaming and AI use cases. Hit the link in the show notes to explore the Skale ecosystem.